Welcome to Trading Nation, folks. I'm Eric Chemi. Today we're joined by Larry McDonald and Craig Johnson. We're talking about the Homebuilders. It was the best performing ETF last year. ITB was that ticker. But this year you can see we're already in correction territory. So it's been a big drop in the ITB after a big year last year. Let's start. Craig Johnson, go for it. Tell us what is going on here.
Well, when we look at the ITB, it's really comprised of a lot of the very large home builders. In fact, Lennar, D.R. Horton, NVR are some of the largest names. They represent about a third of the overall ETF here. When I look at the chart itself, we've violated the uptrend support line that's been intact since the fall of 2016. We've moved through our 50-day moving average, and we're now just retesting our 200-day moving average. You can see at the very bottom of the chart that we've included that the relative strength has been quite poor and has been since January. So it looks like the fears of inflation and the fears of rising rates have really leaned on the home builders at this point in time. But we've corrected right back to a good identifiable support, the 200-day moving average. And I suspect that's a spot where perhaps a little bit more rational thinking comes in and we see a bit of a relief rally or perhaps more start to unfold.
Larry, when you see this chart, you look at ITBs, how much of this is really just a long-term bonds play?
Yeah, it has a lot to do with bonds. The capitulation score that we have in the XHB, for example, is very, very high, one of the strongest signals, and we use a capitulation model to measure the opportunity. And I agree with Craig. I mean, I think there's a tradable bounce here. The one thing you have to understand is the move up in rates has been so swift, especially on the short end of the curve. You know, 3-month LIBOR, for example, which a lot of financing in America is based off of. A lot of adjustable rate loans are based off of LIBOR, and 3-month LIBOR has gone from 1/4% to 2%. So that is creating a little bit of a shock in some of these sectors like housing because of the increased cost of finance, and that will basically create a counter draw in economic data, which I think near term could give the Fed a little bit of a pause and a little bit of caution, and that could help bring rates back down. So, and that would give you a nice pop in the home builder. So I think that's the way it's going to play out the next 60 to 90 days, a tradable counter trend rally in the home builders.
Craig, is there anything else, if somebody didn't like ITB, but maybe they still want to get into the space, is there any other sector, like another ETF in that sector or another basket of companies, something that you've looked at that help give people some exposure, but maybe in a different way?
I'd probably just step back and look at the largest holding inside of the ITB, which is Lennar. It's a stock we're actually recommending. We have it on our recommended list with our work that we do. And again, pulled right back to its 200-day moving average. So that would be another name that I would highlight. Okay,
there we go. That's a good one. Larry, any thoughts on Lennar?
We don't cover individual equities, but you know, the one thing you want to watch out for with ETFs is the equal weighted versus the more heavily weighted ETFs. So the more heavily weighted ETFs, you have to be careful because they can really control or have a heavy hand in the ETF's performance.
Okay, that's true. It's like Apple in the NASDAQ back in the day. It was like 20% of the NASDAQ 100 or something like that, if I remember right. So good conversation with you guys both. Craig Johnson, Larry McDonald, thanks for joining us here on Trading Nation. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.